Take us back a year ago, because you and I talked at the time. As you look back with hindsight, what was the biggest move you made at Bank of America?
Well, I think, David, it's nice to be here again and hope you are all doing well. You know, the biggest thing was to recognize this was a healthcare crisis and we had to take care of our teammates and serve our customers. And what that meant is we had to bring our teammates, you know, off the line, so to speak, all those that could be taken off the line. Well, we made the branches safe because they had to stay open to serve our customers. And it was a tremendous time. And 90,000 computers are deployed in a few weeks. You know, literally this week was the week where we started saying we got to just get people home. And we started doing it. 90,000 computers deployed to people's homes, people doing jobs from home we never thought they would do. And then you had to think about it more structurally. Schools closed down. How could you provide child support? So we created $100 a day for our teammates to spend to hire anybody, not just a regulated healthcare person. Hire your friends, your cousins, your whoever to come take care of your kids so you could work and support our clients. And that took place in 3.5 million days later of use. So that's been a great benefit because the kids were home and the people could, the difficulties of working with the 40,000 people have kids in our company, and they have 80,000 kids to give you a sense. And then we had to manage just case counts and caseloads and get people medical help in ways we never thought we'd do. And so it was a tremendous effort by the team right off the bat, and then you went to the customer side.
Well, exactly. I mean, your initial reaction, I remember, was let's take care of our employees here, our colleagues, and then we also have to take care of our customers. What did you have to do for your customers to help them through this very difficult time?
Well, yeah, first thing, we had to make sure those teammates were ready to go, so we got them all so they could serve the customers. Then we had to sit there, and there was a surge in lending that took place because people got panicked about whether they'd have access to the capital and commercial paper markets. So we had $70 billion of loans that came on really from about this time last year to really in the next 2 or 3 weeks. We had $70 billion of loans on a basis, say, 930 million or something, a billion or something like that. So a big increase in a few weeks. And then the surge of deposits as the stimulus, different stimuli came back into the market. And so that was that took a little longer. And then there was customer assistance. At the end of the day, how could we assist our customers? So 2 million consumers came forward and said, I need to suspend my payments. The unemployment rate went up to 15%, and we took care of all of them. The good news is we're down to next to none on that because people have gotten back to work and paid us, and those that are still unemployed, we need to continue to provide good help to. But those that are employed are paying their debts, and our delinquencies are back below where they were before the crisis. And then you had to help with the capital markets and say an explosion of capital markets activity as you move past the crisis point. And then you had to help with PPP, 350,000 PPP loans done at Bank of America in the various programs during the year. And then you had to help with all the other things that went on, the distribution, the EIP payments, first the $1,200, then the $600, and now the $1,400 payments, into customers' accounts, tens of millions, 10 million, 13, 14 million of those going into our customers' accounts. And all that you had to do while you're running a business with a bunch of people working in places they never worked, and the team did a fantastic job. It was really quite interesting. And then we had a whole medical practice that took place, not that we're doctors, but consulting with our doctors how to keep people safe, get the mask out. 20 million masks have been deployed to our teammates in the branches and other stuff over the last year just to keep them safe, hand sanitizer, barriers and everything so we could conduct business.
You mentioned the $1,400. Are you seeing some of that hit some accounts yet?
It comes in literally as we speak. So it's I think coming in accounts today and tomorrow, and it'll be available to customer accounts based on when the Treasury delivers the money.
And is it available immediately to customers?
It'll be available. Yeah, when the money is in the accounts, It'll be available to them. And I think the credits come through. I think the 17th is the day the IRS said it's fully available. So it'll come through, and the customers will have it. The good news, the interesting thing is, if you actually look at the last stimulus payment, we only see about 35% of something spent. And so this stimulus payment, again, has a little more constraint on terms of who it goes to and things like that. But it's a lot of cash sitting in people's accounts. The average checking account holder from before the crisis to now, Bank of America, that had an average balance of $5,000 in their account, which is up about 150% plus. If they had an average balance of $1,000, they're up a couple 100% in terms of just cash in their accounts. So there's money on this, available to people who can now start spending because they can get out and circulate. As all the talk you had about the vaccine path and the war on the virus being won.
Brian, in addition to all of this, we really saw a spotlight shown on income and wealth inequality in this country, and particularly some of our minorities, our Black Americans, our Hispanic Americans. You also stepped up on that and decided to really put some money behind some of the goodwill.
Well, if you think about it, it was clear that this pandemic virus and the need to win the war on that was clear, but it was having a different effect in different communities. And so immediately we started doing more charitable work, $100 million in charity to help with distributing masks. At that point, governments and hospitals didn't have masks. It's subsequent change, but that's that condition. So we started distributing masks. We started doing anything we could to help. But you really saw this difference in effect between communities of color and Black and Hispanic Americans and other communities, and that was going on. And then you had the killing of George Floyd and the racial, unrest around that, and the social unrest and the protests that needed to be had because there was things that had gone wrong in the killings. And so between that, we announced $1 billion program to really help in racial social justice initiatives. And that had three components. We all denounce racism in our companies and do everything we can to make sure the companies run well that way. But on top of that, we had a lot of conversations in our company over the last 5 years about what we call courageous conversations. So we gave a gift of $25 million to the Smithsonian to build a platform for people outside our company. And why we do that? Because when the teammates came to me after the George Floyd killing and said, what are we going to do? And I wish people outside our company could have conversations like we have inside our company. I worked with Lonnie Bunch, who had run the National Museum of African American History and Culture, which I've been on the board with for a decade or more, and he's now runs the whole Smithsonian. He's terrific. I said to Lonnie and the group, I said, let's get these conversations going. So we gave him a seed gift of $25 million. That was piece two. Then piece three was, what are we going to do about the real problem? And then so we put up $1 billion, and basically that had 4 pillars to it, and we're deep into each pillar. And those pillars were health care. And so we now provided 25 million masks to community centers and food banks and others to help keep people safe. We've given 21 grants to colleges and community colleges, HBCUs and community colleges to help on the HBCU, 4-year education institutions. Those kids are in great shape to get the career development, more career paths available. Community college, more about training. We've done 60 private equity funds to provide equity. We did $250 billion $250 million of additional capacity for CDFIs, community development financial institutions, and we made investments into minority depository institutions where we could buy equity into about 14 of those so far. So we just keep trying to figure out ways from the debt structure, from the equity structure, from the kids coming out of school, any way we can help.
Very comprehensive. Let's turn to the economy right now. It is a year later, and now we have vaccines really being distributed widely. We're over 100 million Americans now. We also have another $1.9 trillion in stimulus coming in. What does that tell you about what growth is going to look like in 2021, Brian?
Well, you were talking a little about this before, David, but our team has the U.S. growth predicted. Candace Browning-Platt, the #1 research platform for many of the last decade in years since I've been CEO. They do a terrific job. They have the U.S. growing at 6.5% for 21 and around 5.5% for 22. Now, you have to step back and think about that. That's an economy basically the same size it was coming into the middle to the end of 18, which was pretty good times in the U.S., predicted to go at 3 times the rate with an interest rate environment that is probably half or lower than it was then. There's all the angst about the 10-year moving to 160, but at that point it was 2.5 moving towards 3. Think about, and the Fed funds rate was much higher than it is now. So think about the amount of accommodation, and then you add the $1.9 trillion stimulus on top of it, plus the stimulus that's still unspent. So when you put that all together, and then the stimulus, frankly, from people going back to work as the economy reopens, the team is at 6.5% in a huge economy. In the U.S., growing faster than the world economy is predicted. They got 5 for the world. If you think about that, that is a pretty powerful engine that has already recovered about 95 to 97% of where it was, and now is growing at 3 times the rate. That's a pretty powerful prediction, and our team is quite convinced it's all there.
Well, and that raises the question a lot of people are asking is it possible we may be overheating the economy? Because we also have been increasing the money supply. I think it's up something like 25% year over year, the M2. It's been held down, the inflation, because there hasn't been much velocity because people are at home. What happens when they come out of home? In fact, some of those depositors you talked about that didn't spend all their stimulus checks. They have it sitting there in their bank account. Are you worried we could get inflation that would be troubling?
Well, that's part of the discussion you see in the market. But let me just tell you what we're seeing in our customer base, David, that will help you think about that. If you think about last year up till March 9th or 10th, that was before any activities had taken to shut down. And we were all hearing about this virus and learning about it. It was really the March 15th and out where people started taking, at the government level and the employee level, significant actions. If you look at that period of time, 2020 over 19 grew double digits, say 10%. When you look at it 20 to 21, we're now growing at 6%. And if you look at it for the month of March, for the first part of March here, it's actually growing above 10%. That's pretty unbelievable. And what you're frankly seeing now is the credit card charges, which had been depressed because it's a lot of travel and entertainment, are back and actually growing year over year. Growing year over year at a time pre-pandemic shutdown. And so you're going to see massive year-over-year comparisons as you move into April when everything was shut down. So the reality is the consumers at Bank of America, which is 50 million people spending $3 trillion plus a year in all these different forms, are spending more money than they did last year and growing at 10%. And that was before the pandemic. That bodes well. And then if you look at the charges, you can see like on a credit card, the seniors and boomers are getting vaccinated. We're up 50% in charges over the last few weeks in terms of travel and related things. You're seeing the TSA statistics. So the types of things are happening. Now, by the way, grocery stores are down a little bit. Why? Because people shifted more to restaurants. And that's all bodes well for normalization of the economy. So we see that very good. Does that overheat the economy? I think you've heard it from Chair Powell in many cases. They're willing to take the risk to get the average inflation rate above 2%. There are people concerned in the market. We all have that concern because inflation's tough to fight if it gets embedded in there. But there's a lot of temporary factors, and we'll see what happens. And I think you'll hear the Fed's most recent economic projections over the next few days, and we'll see what they say. But our economists have raised their projections from 4% to 6% in really 90 days. And I think, likewise, other people will do so.
Well, and Brian, that's part of what I want to ask. You referred to the 10-year yield of being over 1.6 now. And historically, as you point out, that's not that high, goodness knows. But it went up very fast. And some people think it's on its way to go higher than that. Are you concerned about the rapidity with which it's going up? And by the way, where do you think it ends up?
Well, our team basically thinks that it's going to potentially go through 2%, and we'll see. We'll see. But it's the reason it's going up is because people are seeing the economy recover. At the end of the day, this was a healthcare crisis, and we had to win the war on the healthcare crisis. It's the first way that I thought about it, and I've thought about it ever since. We have to win the war against this virus, and they have done that. And they haven't completed it yet, but we have the pieces in place. The vaccines are a game changer, and they're being deployed 100 million shots in arms, which is unbelievable. 30 million sitting on shelves that need to be deployed, and then many coming after it. So I think there's concern about that. I think it'll play out a little bit, David, and I think we have to watch it. But it went up, but it's still back to where it was, only a few months before when it fell, down into the 60 and 80 range. And so I think people have to be careful about these movements are just to get it back in line with where it was, even at a very low level. If you don't look in the last decade and then go back from 2007 backwards and try to count the number of days a 10-year traded below 3%, you won't find a lot. And so as the economy normalizes and the growth rate comes up and we get it above 2%, I think you'll see a little higher rate, but it'll still be, in the grand scheme of things, one of the lowest rates we've seen in a long, long time.
What does it mean for Bank of America's business specifically? You and I have talked in the past. You are a traditional bank. You take deposits. The shape of the yield curve matters to you. It was flat for a long time, even inverted for a minute or two. And now it is really steepening quite a bit. What does that mean, for example, for net interest margin? Your chief financial officer said he's pretty confident about that. Is it looking good for Bank of America?
Yeah, we saw the trough in the third quarter of 20, and we still see that as a trough, and we see it coming back, and by the end of the year, it's back to where sort of it was pre-pandemic. But it's much different. It's driven more by the sheer volume of deposits. Our team has done a great job in driving our deposit franchise across for over $1.8 trillion in deposits. So the loans are still down, and what we're finally seeing is the loans are stabilizing. This is one of the good pieces of news. We expect in the month of March we will cross over to where we're producing more small business credit in that month than we did before the pandemic. And that's been a long haul. So that's 12, 13 months. And so we're seeing some loan demand coming in. With capital markets demand has been outstanding and huge, as you've seen. But in terms of core middle market borrowers, they're starting to, it's flattened out, and that's good. So our NII is affected by our deposits, which are growing very strongly, and again, will grow because of all the stimulus coming in. But importantly is to get loan growth, and we're starting to see that stabilize, and that looks good for us going forward. The shape of the yield curve, with short rates come up, that actually helps us a lot because we have a huge amount of non-interest-bearing deposits that don't reprice. But that's the life of being a great bank and being really the top deposit-gathering bank in the United States.
You mentioned your markets business. Global banking and markets did really well for you in 2020. How's it looking in 2021?
Well, so far so good, and we'll see how it plays out. We got the rest of the quarter to finish and the rest of the year to finish. But the team, Jimmy DeMar and the team under Tom Montag's leadership, has done a great job, and Matthew Coder in the investment banking and corporate banking side, they've done a great job. We had 3 record quarters in corporate investment banking in 2020, and we had strong trading in 2020. But you have to step back and think about what does that really do? What that really represents is clients were able to raise capital to position themselves through this crisis in ways that was pretty remarkable. So people who needed capital to build a bridge to the other side of the crisis were able to raise that capital, and we were able to help them do it. That's pretty amazing. And so I think that it just goes to show you, in the U.S. especially, the resiliency of the economy and the capital markets driven by this huge investor pool of capital is really unique on a worldwide basis, and we should never forget that.
Look out over the horizon just a little bit. Walmart now looks like they might be going into the banking business in whatever way, shape, or form. Bank of America is so strong with your network throughout the country, and particularly with retail banking. Are you at all concerned that a Walmart could come in and really compete with you effectively?
We look at everybody, are all potential competitors. I got thousands of banks that are great competitors today, but we basically define what we're going to do. So we've been driving in a core retail bank. What makes us unique is we serve all segments of clients. We serve mass market retail clients and affluent retail clients and wealthy retail clients and small businesses and medium-sized businesses, large businesses and capital markets. And that franchise is second to none. And so we can drive growth across it all. When you think about competitors coming in, we study all competitor moves, whether it's the fintech disruptors or major players, and look at what could they appeal to the customer, and do we have what we need to appeal. We just crossed 40 million digital customers active at Bank of America. We just crossed 3 million life plans, digitally enabled financial plans for people. We're seeing half our activity in the wealth management business going digital. These are things that I respect every competitor. I don't fear any competitor, but the job of management is to drive this company hard.